Hi, everybody. Okay, welcome to our DST webinar. This is a revolutionary capital gains tax deferral strategy. We're super excited that you guys are here. I'm absolutely pumped, and this is going to change your guys' lives. If you if you do any sort of investing or anything like that, like I promise you, it's going to be an absolute game changer. So I'm sorry for the technical difficulties, kind of getting everything set up. This is kind of like our first go at it. Should have had it a little bit more squared away. So I'm sorry about that. And I will absolutely make that better the next time. I promise you. My name is Pearson York. Welcome to the webinar. We're very excited to have you guys. And so let's start getting into it. The one thing that I want you guys to actually take away from this whole just this whole webinar is that this is an absolutely game changer when it comes to investing in capital gains tax solutions. And so that's what I really want you to do. It's the most powerful, transformational, transparent, legal, and ethical secret capital gains tax deferral strategy out there, and no one knows about it, including your CPAs, your financial advisors, your tax attorneys, your estate planners. And it's going to change the way you view every investment from now on. I know that's a super bold statement, but I promise you by the end of this that that is what I want to have happen. So let's get into it. So here's our outline. Okay. I'm going to kind of go over who I am, the problems, the old solutions, the new way, and then the DST steps. And then conclusion. So a legal disclaimer. This message is for educational purposes only and is intended to provide an overview on how the deferred sales trust works and that can be implemented. Kingdom Luxury Realty and Capital Gains Tax Solutions does not provide legal, tax, professional services, or advice. Each transaction and individual circumstances vary widely, and participants are strongly urged to seek independent legal and tax professional advice. So, I'm really excited about this. One of the things that Kingdom Luxury Realty is super big on is being generous, and I really want to just kind of share this from the bottom of my heart is the fact that this company is more than just trying to go out there and make money. We're seeking first his kingdom. We're big believers in Jesus Christ, and so we're building our organization around that. And we believe in generosity, and we believe in seeking his kingdom and his righteousness over just seeking the world and money. And so with that, one of the things that we're doing is for every person that stays to the end of this webinar, we're donating $10 to Johnny and Friends. And I want to just quickly give a shout out to Lisa. She's going to just kind of explain a little bit about Johnny and Friends, what it does and why it's so cool. And so without further ado, Lisa, I'm going to bring you on, and hopefully this works right.
Hi, everyone. As Pierce said, I'm so excited and honored to be a part of this as well. I don't know if you guys know, but there are over 1 billion people in our world who suffer with disability or suffer from disability. And Johnny and Friends is an international disability center that is all about bringing the gospel and practical help to people suffering. And we do that in a variety of ways. 55 years ago, Johnny was in a diving accident and became a quadriplegic. And Billy Graham decided to make a movie of her life. Barbara Walters interviewed her. And as a result, people started to write letters. Hey, I have a son, or I have a brother, or how can I help with this? And anyhow, Johnny and Friends was birthed from that. And so today we actually meet needs all over the world through Johnny's House, which is a disability center in various countries. We provide food and medication and wheelchairs and physical therapy, and of course, always the gospel and professional counseling. We do family getaways here in the States and internationally. We educate students. We have respite programs. God is doing amazing things for his people who are suffering. And so it's a privilege to partner with you guys, and we're excited for what is happening here. So thanks, Pierce.
You guys are super welcome. And Lisa, we love Johnny and Friends, and we are just so excited to partner up with you guys. We love what you guys do and how you share the gospel and provide just such important fundamental needs for people with disabilities in other places. And so if you guys want to be a part of that, you can reach out to Lisa. We'll send a link out for Johnny and Friends and how you guys can get involved and get, in partnership with them. They do amazing stuff. So we would highly, highly, highly encourage that. So that's if you guys stay to the end. $10 is going in your place to Johnny and Friends. So it's a good cause. So, okay, moving on. I did the legal disclaimer. Look at that picture, though. That's pretty good, huh? Okay. So who is this for? So this webinar is for people who basically have any sort of like real estate business, cryptocurrency, or stock that's highly appreciated that they want to sell and capitalize on the market. Or if you have clients that have highly appreciated assets that they want to sell. And typically our minimums are $1 million of gain. Will kind of be enough pain for them to want to go through the process. And so that's who this is for. Also, we can move assets outside of the taxable estate. So if you are one of those lucky, ultra high net worth individuals who's thinking about, estate planning and how to pass along, some wealth to your heirs without having to pay that tax, without just giving away, and all these other strategies that are okay but aren't as comprehensive, then this is for you as well. This is a fantastic way to move assets outside your taxable estate. So really quick, just who I am. I'm the founder of Kingdom Luxury Realty. I'm a luxury realtor out here in Newport Beach area. I moved down here just to focus on this market for this particular reason. I saw this problem. So personally, I'm a disciple of Christ. We kind of went over that. I'm father of 3 beautiful little girls, Mila, Ellie, and Bella. Husband to an amazing wife, Crystal. She's way better than me. I love sports, having fun, golf, and a good old fashioned. But who I am professionally is I got a business degree from San Diego State in entrepreneurship and marketing, psychology. I'm a real estate investor for the last 5 years, selling mainly in Newport and purchasing in Newport and Las Vegas and some in Riverside. Digital marketer. I'm an expert in the deferred sales trust. I left a lucrative position in medical sales to start this. We kind of talked about that a little bit, but I was doing well and I saw this need and decided to move on. So that's why we're here. So let's get into it. So we were taught to buy low and sell high. And that's fantastic, but there's a problem, at least in America. And that problem is you have capital gains tax. And so the problem is that people are reluctant to sell high because 30 to 50%, depending upon their, where they're at, their state and their income level, have a fat chunk that's coming out of tax because they can't find a way to sell the asset without having to pay that tax. And so a lot of people just don't sell. And so they just stay in their home. They keep running their business. They, just hold on to the stock. They hold on to the Bitcoin. They just don't sell. And they'd like to and capitalize, but they just don't because they don't want to pay the tax. It's not worth it. Some people decide that, hey, I'm going to suck it up and pay the tax. And that's great. They just launched, a really big initiative where they need trillions more dollars. And so we need people to pay their taxes. So if that's, what you feel called to do, like, God bless you. Some people don't want to do that. And so we have a solution for those. And that's where these other solutions come in. Some things like a 1031, a Delaware statutory, charitable remainder, 121 exclusion, some other methods. We're going to go to a little bit of detail about those really quickly. So most of you guys, if you've ever been in investment real estate, know what a 1031 exchange is. It's basically you sell a property and you roll the funds into another property. And there's some challenges with it. It's the most widely known tax deferral, capital gains tax deferral method out there. It's scrutinized right now. Biden's, playing with taking it away. There's some things going on. There's some pros, which is you get to defer the tax. It's widely known. It's inexpensive. It's a great way to upgrade if you can find a great deal. However, there's a lot of cons with it. And the cons are there's time constraints. So you have 45 days to identify property and 180 days to close. We call it the shotgun wedding. 45 days to get engaged, 180 days to get married. You have to replace the debt. So you're selling high, but you're buying even higher 180 days later. You have to go back into like kind assets. So you have to go back into real estate. You continue the same depreciation schedule, which means that one of the benefits of owning real estate is that you are able to take the useful life of the property and basically divide it by 27.5 and deduct that from your taxes each year, because as things get older, they lose their usefulness. And so they give you depreciation to offset that cost. And that's a big reason why people go in. But when you do a 1031, you basically have to subtract what you've already depreciated into that new property. And so that can be a problem. You also have to stay illiquid. You have to go back into real estate. And if you don't want to, you can't pivot out of there. It's not easy to sell an asset and just move into something else. And a lot of people make a lot of bad investment decisions in order to keep that 30 to 50%. That's what happened in 2004, 5, and 6 when people were, just 1031ing into new properties, and they got crushed in 2008. And so it can absolutely be harmful if you don't do it right and don't overpay for properties. So the next one is a Delaware statutory trust. The pros are they're non-recourse loans. They're beautiful Class A turnkey properties. You basically just get mailbox money sent to your check every day or every week or every month or whatever it is. And it solves a mortgage over basis, which is important. We use these in conjunction with some other strategies in order to help, but this is why you would use this. The cons are, though, that it's not very liquid and the funds are tied up for a long time. They're high fees and, they're not value add properties. Your depreciation schedule travels with you. This is basically a 1031 into like a big REIT or something like that. Another option is a charitable remainder trust, and these are great if you have a good organization. I'm sure Johnny and Friends has gotten a couple of these over the years. They are great to a point. They have tax reductions that you can automatically take up front, and you can give it away to charity. So that's awesome. You get some cash flow, and you get to protect your assets. The cons are, though, that it's unamendable. So if something were to happen where, the leadership in an organization changes, or if, the mission changes and it's no longer something that you believe in or support, it's really, really, really difficult to change these. They're irrevocable trusts. And so you can't change the assets. So you have a little bit of flexibility in the beginning, but once you set it, it's like set in stone. It's not changing. They are extremely complicated administratively. And the only way to pass it along to your heirs is if you do life insurance, which kind of, can be good, but also you're pretty limited in your options. If you have a home and it's a single family residence, you get $500,000 if you're married. And then you get, but it's only for your primary residence. So, that's the con. You get 500 grand added to your basis. This works a lot for people that are in homes that you buy for, the average where it's, 2 to maybe even up to $1 million, $1.5 million. If you only have 500,000 worth of gain, then this is a great strategy. You just do it and move on. But a lot of people, especially in this market, or if you're doing investment real estate, you can't do this. So it's not enough. And there's other methods, retirement accounts, that you kind of have to set up beforehand. You can also carry paper, which means that you basically do an installment sale where you're the bank and the people send you money every month to basically buy down the debt, and you get interest, which is great. The problem is you basically give your asset over to another person, and they have to be the ones to maintain it. And if they foreclose or do a bad job, they can destroy the value of the asset, and then your note is no longer tied to anything of substantial importance. So those are some old ways. But I want you guys to think for a second. So what if you didn't have this capital gains tax issue? What would you do with the money? Would you travel? Would you retire early and spend time with your family? Would you give more? Would you go play golf? What would you do? I'm going to do another Johnny and Friends plug here really quick. They do have a golf retreat to Pebble Beach, which is totally awesome. So if you guys do donate to them and partner up with them, then who knows, you might get invited to go golf Pebble Beach and Spyglass, which I've done before, and it is so awesome. And yeah, absolutely worth it. So another reason to donate to Johnny and Friends. But what would you do? Think about that for a second. Because we're going to talk about a new way, a better way. So all these ways that we just discussed, all these kind of strategies are kind of like Blockbuster. And they basically are cool, but they're not necessarily super efficient anymore. I mean, you guys remember going to Blockbuster and you'd have to drive a half an hour, and they had the movie sometimes, but not all the time. And then you had to overpay for candy and your Twizzlers and all that kind of stuff was just way too much. And then this little company called Netflix came along, and they're like, hey, you can do this better by just sending the DVDs via mail. And they're like, no, we're $6 billion. We're not going to do it. And then what happened is Netflix overtook them, and Blockbuster is now gone. You guys know the story. But what does Netflix have that Blockbuster have? It has flexibility. It has innovation. It has ease of use. It has no time constraints like some of the other things that you would have to do with Blockbuster. So this is the deferred sales trust, and this is the best thing that we know and the most powerful strategy out there. So let's get into it. So the secrets. So this is secret one, and this is the most disruptive strategy to hit the market. And why? What makes this so transformational? Well, you get liquidity. So you have the ability to have cash reserves that you can go in and out of assets without having to sell. You get to remove the debt. You no longer have to be tied to servicing a debt. You can pay off all of your debt and be totally debt free. You get to diversify. So you don't have to go back into real estate like you would if you did a 1031. You can go from a crypto to real estate. You can go from real estate to stocks and bonds. You can go from stocks and bonds to real estate. It doesn't matter. You get diversification. You get to control the timing of when you want to go in and out of an asset. And so that's a huge benefit as well. And so you also get flexibility between what assets you're in and not. So like with the charitable remainder trust, you only are in assets that's set in stone. Well, this one you can go into stocks, and when you find that deal that's amazing, you can invest into it right away. So there's a ton of options with it. You get cash flow if you need cash flow. You get a new depreciation schedule when you go back into real estate, which is amazing. And then you get tax flow on top of it. You get to control when you pay the tax, when you don't pay the tax. And so it gives you all of these benefits. Are you guys getting this? Is this starting to make sense about the power of this thing? If not, some of these stories are gonna help you. So the Monday morning quarterback. So this guy was a client of ours, and back in the early 2000s, he had done multiple 1031s into this apartment building that was across the street from the Minnesota Vikings, and he decided that he didn't want to 1031 into something. He wanted to just cash out. He saw the writing on the wall, and so he's like, I don't want a 1031. So he did a deferred sales trust. He went through, and he put all of the money. He deferred a couple $1 million in tax. He deferred, and then he put it into super conservative stocks and bonds and mutual funds, and earning at about 4%. And he waited, and 2008 came, and if you guys remember, that crashed. All the values plummeted. And in 2012, he gets a call from the bank, and they say, hey, that apartment building you sold, we're foreclosing on the buyer and we're wondering if you'd like to buy it back. And he says, well, how much is it? And they're like, well, it's about 40% off. He's like, yeah, absolutely. So he partnered with his trust and he bought the property back at 40% on the dollar, and then turned around and got a brand new depreciation schedule on top of it. So the amount of power that you get with this, is that making sense? Like, can you guys see how transformational that would be to sell an asset at the peak and turn around and buy it back a few years later at a 40% discount? Like, it's insane. It's crazy what this can do. A couple more examples. So this woman bought a property in Santa Cruz for $900,000. She became a client of ours, and she wanted to sell. She was done. She's an elderly lady, and she sold it for $7.9 million. Didn't want a 1031, and she was able to use the deferred sales trust and defer $2.6 million in tax. That's $2.6 extra million that she has in her bank now that she didn't have before. That's now cash flowing and earning interest on the money that she would not have had. I mean, how amazing is that? Is that crazy? The thing is, this also works for businesses, not just primary homes and not just investment real estate. So this company, Logo, Alabama, basically sold for $2.6 million. They deferred almost $600,000 in tax, and they were able to put it into other business ventures that they wanted to start up. So they built it up, they sold it, and now they're reinvesting it into businesses that they want to reinvest in. It's transformational. The other thing is, this works for Bitcoin and Ethereum. We had a client who bought Bitcoin for about $100,000 a few years ago. It jumped up to about 13 million. He wanted to liquidate some of it, take some chips off the table. There was no way to do that before he talked to us. And when he met us, he looked at the structure. He's like, okay, let's do it. So he liquidated 5 million when Ethereum hit 4,100. This was about a month and a half ago, 2 months ago now. He deferred $1.85 million in capital gains tax. He's now putting that money into an apartment deal that we have going on in Texas. So the ability and the flexibility, the control that you get over when and where you put the money, like, how amazing is this? Here's an example. I want to show you guys how this actually looks from a perspective of numbers. So let's just say, for example, you guys bought a property for $1 million, okay, and you were going to sell it for $5 million. Your basis, if you depreciated and had some improvements and all this, is about $811,000. And your sales price is $5 million. You have some closing costs of about $300,000, and let's just say you got some debt of $100,000. So everything, if you were to compare these side by side, is the exact same. So the deferred sales trust versus no deferred sales trust, all the way up to the gross proceeds. Your taxable liability on this particular example would be around $1.54 million. So if you were to not do a deferred sales trust, you would get about 4.3 million, and then you would pay 1.5 million in tax. You would get 2.8 million hitting your bank account, and if you were to put that into an 8% returning, compounding interest mutual fund account, you would expect to earn about $224,000 a year on top of that, and you would earn about 18 grand a month. However, after 10 years, you would compound, and that money, that 2.8 million, would double and pretty much hit 6 million. So that's amazing. That doesn't suck at all. That's a great return, right? But now let's look to see what you can do if you don't have to pay this $1.5 million. You will have to pay some fees for the DST. It'll come up to about 130 grand, but you're going to get to put $4.2 million into that account instead of 2.9 or 2.8. And so now you're earning at an 8% return. You're earning 337 as opposed to 224. You're earning an extra $10,000 a month on top of it. And then when you see this number, this compounding number, instead of 6 million, you're making 9 million. So now you've compounded it to 9 million. you've got an extra $3 million in your account because of doing the deferred sales trust and not paying the tax. Do you guys get this now? Is this starting to click? Is this starting to make sense? Like how incredibly powerful this is? Like what can you do with an extra $3 million? I mean, how much could you give? How much earlier could you retire? You know, what could you buy a little plane and go and travel around the world? Like what could you do with that? You know, and this is just a small example. So I want you guys to understand what the power of this is. And I hope that makes sense. And the other thing is this can save a failed 1031 exchange. So, so Steve was over here. He had a $1 million property, 1.7. He had about 500,000 in debt and 350 in taxes that he needed to defer. He was going to do a 1031 and some personal things came up and it prevented him from doing that. And he was pretty reluctant, honestly, to kind of like work with us, but he kind of didn't really have another option if he didn't want to pay the 350. And so he took a chance and he took a leap with us and we saved his failed 1031 exchange, him and his partner. We saved his partnership. They deferred about 350,000 in tax. And it was a match made in heaven for him. He's super pumped. And when he finds another deal that he likes, he's going to go back into it. And so that's another amazing benefit that you can do. So if you're in a 1031 currently, we can save it before you have to overpay for a property. You're probably thinking by this point, like, this sounds amazing, like, but why hasn't my CPA heard about this? Why haven't my team told me about this? Like, I want to talk to my trusted advisors, and that's all, very valid points. And the secret number 2 is that this has actually been a secret. And so we're going to talk about why you've never heard about this and why your team has never heard about this. And so the reason is because it's a proprietary structure. And so it was created about 25 years ago by a guy by the name of Todd Campbell. He created the structure and they kept it in their internal law firm for about 20 years. They built out a track record. They built out, the foundation. They've had it. They put it through the fire and the test to make sure that it was, good to go, and everything checked out. And they finally got it there. And so there's only 13 trusted advisors. Capital Gains Tax Solutions is one of them. Partner and buddy Brett Schwartz. He's doing amazing things. And so, but it's been a secret, and there's been a fine line between, how do we market this thing and how do we protect it? And so it's been a fine line to walk, and we're now to the point to where we feel that we've got the track record and everything good to go, and so we're ready to blow this thing up. I do want to say that we had Kevin Harrington from Shark Tank on the podcast, and just listen to what he says.
You buy stock, and the stock is at this price, and then 2 years later, the stock is triple the price, and you want to sell it. Are you telling me that you have a way to defer the tax situation there? Let's talk about structures and ideas, and maybe you can shed some light on it for me too.
Yeah, and that's actually why we started our company, Capital Gains Tax Solutions, right? Because in the 2008 crash, a lot of my clients, when I was at Marcus and Millichap selling highly appreciated, multifamily properties in Northern California, they had felt trapped and pressured and had overpaid via the 1031 exchange. That's the only thing they knew, right? And they thought that was the only tool they could use to defer tax. And then everything stopped. And that was in the 05-06 market. And then 08 hit, and then some of them lost everything. Some of them lost half. And then we found out about a thing called a deferred sales trust, which goes back 25 years now, thousands of closes. It's been through the IRS, but it's proprietary and it's protected. And so we launched our company on basically that premise that there is a better way. It's an alternative way, and it can actually work for not only real estate, but it works for primary homes, it works for business sales, works for stock, and it's had an amazing track record. But even the smartest folks either have heard about it or don't quite quite know about it because they think they know, but they don't.
Let's talk about public companies and stock. So because you mentioned, you started off saying that the capital gains work for real estate. How do you do that when you buy stock and the stock is at this price, and then 2 years later, the stock is triple the price and you want to sell it? Are you telling me that you have a way to defer the tax situation there? Is that what you're telling me?
Yes, absolutely. Yes.
Okay, so I hope that that was inspirational for you guys. So when I say that not even your trusted advisors, know about this, to have a guy like Kevin Harrington on our, on our show, and to him not know about it, and for his, that guy has billions of dollars with tons of different companies. Like, how come he's never heard about it before? I mean it. Like, this is it was protected. It's proprietary. Like, people do not know about this. And so here's a couple more examples. If any of you guys were like financial advisors or anything, you'll know who this guy is, David Young. But he was a former executive VP of a company called PIMCO, and they're just a huge financial advising firm. And basically they just had like 50 billion in like assets under management that they managed. And so he left that company, started a new one. And so he was looking for a solution. He learned about the deferred sales trust, and he spent 2 years with him and his legal team totally vetting this process. And they dig deep, and they did a huge audit and due diligence and everything. And they came back and they're like, wow, this is amazing. They said two things. They said, Todd Campbell's the smartest guy we've ever met. And this is an absolute game changer. And so our question, right, is if it's good enough for David Young and his legal team, right? If it's good enough for Kevin Harrington and his legal team, like, is it good enough for you guys and your team? One thing I totally want to emphasize is that we're very collaboration over competition. We're not here to displace your guys' team. Your team is in place and they're set. We want to come alongside your team and just help them and just kind of stay in our lane, and they can stay in their lane. We'll bring them in and show them everything that's going on. We want them to bless it. So your financial advisors, your CPAs, your tax attorneys, your estate planners, like all those people need to get in on the same room. This is a very transparent process, and it takes everyone to see what's going on. So I want to make sure that that's very clear. This was a client of ours. He was actually the #1 Keller Williams agent in Palo Alto, and he rolled with some super high net worth individuals. He had a primary home. He bought it for $6 million. He sold it for about 8.3. He had about a $690,000 capital gains tax liability, and he had never heard of the deferred sales trust, and neither of any of his friends. And so they vetted the process. We got everyone involved. They did it. He deferred $690,000 in capital gains tax, and he did it. And now he's a total believer in one of our favorite clients. So are you guys starting to see this, that like I wasn't kidding when I said like, hey, your team doesn't know about this? Like there's a reason why. And it's not because I'm some super special person. I just happened to be in the right room at the right time, and God just kind of put me in the right place. And I was smart enough to just shut up and listen. I'm not, there's a lot of people in this chat right now that are a lot smarter than I am. So, but it's just been a secret. And so it's now getting blown out. In the next few years, you guys are going to hear about this. And so this is a chance for you guys to get in early and to leverage and to utilize this strategy for just transforming everything that you guys do from now on. You're probably thinking, okay, well, this is probably too good to be true. Like, how does this work? Like, is this even legal? And so I want to just kind of address some of those. So the secret number 3 is this is the most transparent, legal, and ethical strategy that exists. And a lot of that has to do with the people that we work with and how we bring everybody in and how we make sure that everyone's on the same page. And so the first question you should definitely ask is, okay, well, what's the tax code? And the tax code is IRC code 453, which is just a seller carryback. It's an installment sale. And so, that's the tax code. That's what this whole is the foundation. So you're probably asking, okay, how does this work? So really quick, traditionally, right, you have a seller, right, and a buyer. And in a traditional sale, you would have the seller sell the asset to the buyer, and the buyer would just fund the seller's bank account, escrow, and then into the bank account. And what happens then is when that money hits that bank account, that triggers a taxable event. It's called constructive receipt. And at that point, you're going to owe the tax. So if you do this and try and do a DST before or after you sell the property, we can't help you. You got to get in early. So what we do is just you line up the buyer and get everything all, squared away, and everything proceeds as normal, except right before we close, we're going to sell the asset to an unrelated third-party trustee. That is Capital Gains Tax Solutions. And so let's just take this $5 million example we've been working with. So you sell the asset to the trust for $5 million. The trust is going to turn around and sell the asset to the cash buyer for $5 million. And that buyer is going to fund the trust, whether it's cash or financing, however they're going to do it. They fund the trust. So the money goes into the trust. The trust turns around and they write you, the seller, a note for $5 million. After the transactions, it's a simultaneous close. The dust settles. The dust is clear. The cash buyer walks away with the property. The funds are in the trust, and you have a note. And now the trust then invests the funds into the assets that we have mapped out beforehand into what we're going to put the cash into and what we're going to invest the net proceeds into. So that's how it works. And the reason why it works is because you are now a lender to the trust, and the trust is going to owe you that $5 million that you have, and they're going to pay you back in installment payments. So you're going to get cash flow. And what's cool is we talked about, you can turn on and off the cash flow. So some people don't necessarily want the cash right away, so they can let it compound for 3 years. They can take distributions when they want. They can do half. There's so much flexibility that you get that it's unbelievable. So did that make sense to everybody? I hope I didn't, pass through that too much. I just wanted to make sure that made sense. So here's another example. So Cal, and what's interesting about Cal is Cal was a financial advisor, but even more so, his wife was a U.S. attorney for the IRS, and so she had a ton of friends in the IRS and in the U.S. Treasury. And Cal had a financial services business that he wanted to sell, and he was going to have to spend about an extra 10 years in order to make enough money to retire to maintain the lifestyle and the that they had if he sold the business and had to pay the tax. And so he heard about this. He said he was really well versed in tax code. He hadn't heard of this before, and so he was pretty skeptical. But he was like, you know what, let me just see. So he ran some numbers and he found out that he could literally retire that day if this was true. And so he was like, you know what, I'm going to give this a shot. And so he gave it to his wife, and he's like, you know what, the people, you're, an attorney with the, U.S. Treasury Department, all the people with the IRS, you've worked with the big 4 accounting firms, auditing them and all this kind of stuff. Players, I want you to take this and go audit it, just tear it apart. And so he gave it to her, and 2 days later, she walks in with a stack of papers. She throws it on the counter, and she says 2 words that changed his life and hers. And she says, "It's legit." And he was like, okay, well, if it's legit and everyone that vetted it, then good enough for me. So he ran the numbers. They were actually undervaluing his business. He was able to sell his business within the next 45 days for, I think, 10% more than what he originally thought. He deferred 100% of the capital gains tax. They put it into super conservative investments, and they've been living off the cash flow ever since. He was able to retire 10 years earlier, and now he travels around the world. He spends time with his wife. He visits his grandkids. He has so much more freedom and flexibility that he's able to do all these things. And so it's because of this strategy. And so I hope that just kind of speaks to a little bit more of the power of this thing. So let's check in on the track record, how we know it's legal and how's this been vetted. And the answer is yes. So we're actually batting 1,000. So there's been 3,000 plus closes since its inception about 25 years ago. There have been 12 random audits. I mean, it's just 12 people who have had DSTs who have audited, just gotten audited randomly. And all 12 of those audits were no changes, no findings. Like, that in itself is an unbelievable statistic. Like, that's like saying a home inspector finds nothing. It is these guys' jobs to go out and literally find things that are wrong. And even the most nitpicky thing, to have 12 no change, no findings audits is unheard of. And so we're batting 1,000. They've had 2 formal audits from the IRS who actually flew them to DC and deep dived into the structure. They opened all the books. They showed them absolutely everything. And they didn't do this just once. They did it twice. Both times, no changes, no findings. Unbelievable backing by the IRS. Unbelievable. Are you guys getting like how, when's the last time you guys got audited and then like there was nothing wrong? Has that ever happened to anybody ever? And the fact that we've done it 14 times, it's unbelievable. There's also a formal audit by FINRA. Also, no changes, no findings. So we have an unbelievable track record. It's unheard of, and it's backing everything that we're putting in. You guys might be asking now, like, okay, well, is my money safe? And yes, we use the largest banks. You guys get what's called a deposit account control agreement, a DACA account, which means the funds cannot move without your signature. So we can't just take it and run to Mexico. You guys get lifetime audit defense with Campbell Law for setting this up. And the actual, like, the costs of it are relatively low in comparison to what you would have to pay. So instead of putting your money in net of capital gains tax, you're putting your money in net of attorney's fees, which is exponentially less. So the fees, and these, I want to give a caveat, these are all like said to be estimations. The fees will vary based on your individual basis. So you have to set up a strategy call with us to break down your individual situation to determine all of these different factors. It's the one kind of caveat with this is that it can be a little bit complex. And so it requires getting in early. It requires you to get on a call and deep dive into each specific example. There's no one size really fits all with this. So a complete breakdown can be provided once we get into your unique situation. But typically what you're going to see, and this is what it pretty much ballparks to, is about a total of 3.25%, give or take a few basis points. And so there's typically a one-time setup fee for the trust to go to Campbell Law. Comes with lifetime audit defense, is about 1.5% or 1.25%. There's a financial advisor fee that reoccurs on an annual basis of about 1%. Of the net proceeds, and then a trustee fee, which is also about 1%. There's some other little minor fees that I've kind of rolled into the trustee fee, but it comes out to roughly 1%. So that's what you're looking at. But guess what? There's no cost to setting this up unless you actually use it. So you could set it up to save a failed 1031 exchange as a backup plan, and if you don't use it, you don't pay anything. So there's no risk or anything like that to calling us and getting this scheduled and talk about your unique situation. So just keep that in mind, that we don't get paid unless we close a deal. So our goal is to earn about 8% net of all fees over a 10-year period of time. Now, each person is different depending upon their life before, and we'll go into the process here, but typically earning 8% is a pretty solid goal that we hit more often than not. So what does this look like in 4 steps? So the step 1 is to get in early and map out a wealth plan with us, get everyone on the same page. When you fail to plan, you plan to fail. The step 2 is you sell the asset. Step 3 is we fund the trust and we put the investments into what we've kind of mapped out in step 1. And then step 4 is enjoy your wealth and give more. So these typically work on 10-year notes. They can be structured however you want, but typically they're 10-year notes earning at about 8% net of all reoccurring fees, and you can always pull out and pay the tax whenever you want. So I know that I've thrown a ton at you. So let me ask you a question. How are we feeling? Are you guys getting this? Are you guys understanding how transformational this can be? I mean, it's insane. So, before we move on, I want to say, I know I've thrown a lot at you, probably more than you guys can absorb in, a 45 minutes, and we're over a few minutes. I'm sorry. We kind of got a little bit late start, but if I open up our calendar and set up times for you guys to do like a strategy call, would that be something you guys are interested in? If you guys want to just type in the chat. Okay. So just if all you guys take away from this is like, this could save you $300 to $500 to $1 million, $3 million in capital gains tax. I mean, would this have been worth your time, right? Like, if this can help you retire 10 years earlier, like it did with Cal, like, would it be worth your time? I mean, if it saves your heirs like 40% on the estate tax when you pass, like, would it be worth your time, right? So this gives you the freedom and flexibility to market for your next investment. Like, so hopefully this was worth it for you guys. And if you guys would like, you can connect with us. You can go to our website at kingdomluxuryrealty.com and set up a strategy call. And from there, we'll dive into specifics and we'll see, what we can do to help you guys out. Glad you guys found some value here. And so far, this is technically the end. I have 1, 2, 3, 4, 5, 6, 7 people. So Johnny and friends, you got your 70 coming your way. And we are definitely going to do this again. So if you guys need a re-up, we'll send out a link again, and you guys can invite your friends or, whoever it is that you want that needs to see this. This does take a little bit of an educational time. So I definitely want to, give that to you and connect up with you. I'm actually now going to turn on everybody, and if there's any questions or anything like that, be happy to answer it. So here we go. All right. Do we have any questions?
I'm excited for the next one.
Yeah, definitely. Is that CJ? Nope, lost her. Okay. So yeah, guys, just go to kingdomluxuryrealty.com, connect with us, and we will, from there, we'll send out more links for to do this again. Like I said, invite your friends. We're going to be doing this a little bit more. So we're excited to get rolling on this. And next time it'll be smoother, I promise.
Thank you, Pierce.
You got it, guys.
Thank you.
You're super welcome, guys. Thanks so much for coming. And we will we'll connect with you guys pretty soon. Have a good one.
You too.